In case you missed it, another 50-point rate cut was announced by the Bank of Canada this morning. It's kind of like they're trying to rewrite this rate cycle as a best-of compilation for rate hikes and rate cuts. Hey everyone, Myles Nowik here from the Nowik Mortgage Team, powered by Indy Mortgage. And today we're diving into the latest news that's got every mortgage broker, homeowner, and potential buyer buzzing. Yes, the Bank of Canada has once again decided to drop it like it's hot. Another 50 basis point cut is here, and it could have the potential to shake things up. So what does this mean for your mortgage, for the housing prices, and of course, for the economy? Well, let's get into it. Okay, so here's the deal. The Bank of Canada just cut the policy rate by 50 basis points, bringing it down to 3.25%. This is the fifth consecutive cut since June, and it's starting to feel like they're trying to patch up 2023's aggressive rate hikes. I mean, honestly, tell me they raised rates too high without telling me they raised rates too high. Nothing screams that like back-to-back 50-point cuts. But here's the kicker. The Canadian economy isn't exactly thriving. Unemployment is climbing, staying at about 6.8%, and GDP growth is, let's just say it's underwhelming. Alberta and Quebec are hanging on, but the rest of the country, not so much. The economy is showing strain and signs of cracking. And if that's not enough, there are some serious wild cards in the mix. Let's talk trade and tariffs for a second here. The US is threatening tariffs on Canadian exports, potentially upwards of 25%, which could throw a major wrench into our already struggling economy. The Bank of Canada says they're preparing contingency plans, but let's be honest here. This is the financial equivalent of saying, well, we'll cross that bridge when we get to it. Meanwhile, business investment is also weak, thanks to trade uncertainties and slower than hoped recovery. And here's the cherry on top with that. Wage growth is still generally high, which should be great news, right? Not so fast. It's growing faster than productivity, and that imbalance could push inflation back up just when we thought it was under control. We also have a Liberal government and Justin Trudeau handing out billions of dollars to essentially buy votes, increasing our deficit and putting upward pressure on inflationary numbers. But hey, at least you're going to get a cheaper Christmas tree this year, right? I outlined this in more detail in my recently posted video, and I'll make sure to put a link to that in the description below if you're interested. So, in other words, we're dealing with a cocktail of uncertainty, and the Bank of Canada is trying to mix in just enough rate cuts to keep us from a full-on economic hangover. Now, what about housing? Here's where things get interesting. In the real estate market, we're seeing condos in major urban centers like Toronto and Vancouver struggling pretty aggressively, while single-family homes are holding steady. Prices aren't skyrocketing, but they're not tanking either. Buyers are cautious, and for good reason, and sellers are holding their cards close to their chest, refusing to sell if they don't have to. This rate cut was supposed to stimulate activity, but with the economic vibe being meh at best, people are playing it safe. But here's where everything gets a little bit more juicy. Projected rate cuts in early 2025 could spark some serious competition amongst the banks. Remember that video I did about potential mortgage rate wars? If you didn't and you have a mortgage, you're definitely going to want to check that one out after this. I'll make sure to put a link in the description for that for you. With a flood of renewals coming up, lenders are about to throw down like it's Black Friday in the mortgage renewal space, and it could even affect the buyer's market as well. This means lower rates, better products, and more aggressive offers could be on the horizon. Now, let's address the elephant in the room. Will this rate cut make it easier for people to qualify for a home? The short answer is not immediately. Here's why. Fixed rates are still lower than variable rates in most cases. For example, on a high-ratio purchase with less than 20% down, fixed rates are still sitting between 4.34% and 4.54%, depending on the lender. Meanwhile, variable rates, even with the cut, are hovering around 4.5 to 4.6%. Keep in mind, this is based on the best possible mortgage products available. None of those bona fide sales clause or high breakage penalty products that stranglehold you into working with that one specific lender for the rest of your life. So while this cut might stir up some psychological confidence amongst buyers, it's not going to create an overnight affordability boost. That said, as rate cuts are projected in early 2025, the dynamics could shift. And that's when variable rates might start to look like the best option. And let's talk about variable rates for a second. With all signs signaling to the policy rate dropping down to around 2.5% by the summer, we're likely in for a prolonged period of cheaper borrowing costs, especially on these variable rate mortgages. If you're sitting on the fence about whether to go fixed or variable, we should chat, because the way things are shaping up, flexibility might be your best friend going through 2025 and 2026. So to recap, the Bank of Canada cut rates again, the economy is shaky, and the housing market is cautiously optimistic. Fixed rates are stable for now, but not likely to immediately drop with the pending trade war, and variables could become the hot ticket item through next year and 2026. And don't forget, banks are about to duke it out for your business when it comes to mortgage renewals. It's going to be the equivalent of like a banker UFC fight. So keep your eyes on the market, stay informed, and as always, get the advice that's right for your financial goals. Now, if that sounds like a lot to digest, don't worry, you're not alone. Drop a comment below with your thoughts on these rate cuts. Do you think they're enough to turn things around? And if you did have questions about them, you can feel free to click the link in the description to book a call with me and my team where we can help you analyze your needs to make sure you're getting the best mortgage product to fit your lifestyle and your goals. And hey, if you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss any future updates. Once again, I'm Myles Nowik. Thanks so much for tuning in. We'll catch you on the next one.